I'm looking forward to speaking to Faryar Shirzad from Coinbase. We've had conversations earlier today about, and later also today, on stablecoins and how crypto markets are evolving. It's therefore very interesting, Faryar, to have you with us to give us a bit of a sense of how you see the market evolve, both in Europe and globally. Thanks for being with us.
No, thanks for having me on, Nick. I'm glad to be here.
Thank you. Maybe going straight into it. I mean, maybe you can give us a few words on Coinbase. Maybe not everybody in the audience is fully aware with the company. They should, but maybe not everybody is.
Well, Coinbase is the second largest crypto exchange in the world. We started in the United States maybe 11 years ago by Brian Armstrong, and he created Coinbase with the idea that he was going to create the most compliant and transparent crypto exchange in the market. At the time that he created Coinbase, it was a very innovative strategy to take because people really weren't even paying attention to crypto at the time. So regulatory compliance really wasn't an issue that was being pressed by any sort of outside forces. And the reason I start with that as a framing point with regard to Coinbase is that the era that we're in, and I think this is a credit to the adoption of crypto, is heavily defined by the regulatory environment around it, including in Europe with MiCA. And Coinbase, in our view, has always been the company that's been best positioned for this moment in time that we all at the company have expected to arrive, where the crypto adoption's at a level where regulatory compliance is critical. But as you think about the company, we are, as I said, the second largest exchange. We're also the only publicly traded crypto exchange, or at least the only one of any scale. We're listed on NASDAQ. That means we're audited regularly by Deloitte. We operate under primarily out of the U.S., out of two entities. They're regulated by the New York Department of Financial Services. But we have licenses and registrations all around the world. And Europe is obviously a really important focus of ours.
And looking at the history of Coinbase, how did you see the market evolve? And more importantly, what trends do you see in the digital asset market at the moment? And also maybe going forward, what are some of your expectations there?
Well, there are a lot of interesting trends. I think the first one is the policy trend and the regulatory trend, which is towards the more active regulation of crypto intermediaries like Coinbase. And so MiCA is an example of that. The UK, Australia, Hong Kong, Singapore, Brazil, and even the United States in its own way are all moving forward with some form of framework of regulation around crypto intermediation. And that is a trend that's with us and is going to be kind of a defining aspect of the crypto markets. I think the other aspect of it is, I think for a lot of people that got into crypto early on, the expectation is that it would be adopted primarily as a payment mechanism. And I think we've seen crypto has been heavily defined by as a speculative investment. And so the trading frenzy around crypto over the last several years has been the defining lens through which people, including policymakers, have looked at crypto. I think we expect at Coinbase that payments will become a much more significant part of the crypto use case, particularly in emerging markets and even in developed markets as people begin to understand, including people like PayPal and Visa, and adopting crypto solutions to modernize their systems. And I think that's a really big trend line that we're seeing. And then the final trend I would point out to is institutional adoption. The level of institutional interest, particularly in Bitcoin, but also in other crypto tokens, has grown dramatically. And so this sort of retail intensive aspect of crypto, I think, is going to give way to a much more diversified user base. And that'll create more liquidity, more orderly price discovery, less volatile markets. And I think those are three really interesting trends that complement each other in important ways that I think are worth watching.
It's interesting because we'll have a panel in a moment talking about the use, among other things, of stablecoins in the payment context as part of the G20 roadmap. And we had earlier an interesting session on, barriers and opportunities for institutional investors to adopt crypto assets. But one of the most interesting developments of the last week or two was the BTC approval of the first ETFs. And obviously, we see a massive growth in ETF markets more generally. So what do you think this has done, other than to the price of Bitcoin, as I support it, to the adoption of crypto assets and also for the future of Coinbase?
Well, context is important. So the SEC, the U.S. Securities and Exchange Commission, approved the issuance of spot Bitcoin ETFs. So these are these exchange-traded funds. So it's a way for people to buy through their traditional securities broker exposure to Bitcoin through these exchange-traded funds, where the underlying asset is a Bitcoin. And as I think your audience knows well, they're ETFs for all sorts of different financial assets, securities, as well as commodities. And this is something the SEC really resisted enormously and ultimately had to be taken to court. An appellate court and a federal appellate court in the United States found that the denial was arbitrary, capricious, and an abuse of power. And so it required some quite dramatic judicial intervention to get the SEC to approve it. But nonetheless, the fact that they did approve it actually has brought in very significant institutional brokers into the crypto space and given them the authorization and the ability to offer crypto exposure to a wide range of millions of American consumers. And so Fidelity, Franklin Templeton, BlackRock, and a number of other very large-scale investors now have the ability to offer Bitcoin exposure to their customers. And the SEC, even though it ultimately had to have its hand forced, it took a big step in essentially recognizing the reality of the crypto markets and providing a regulated path for people to purchase them. So it was a really big decision in the United States, both with regard to mass adoption, but also in terms of a step towards regulatory clarity for crypto. And I think we're very pleased about that. We're also pleased, and this is something that's been less discussed, is in the 2 or 3 weeks since the ETF approvals happened, the plumbing around the ETF markets has actually worked quite well. There's a somewhat of a complicated custodial process that Coinbase is actually the custodian in 8 of the 10 approved applications, but there's a redemption process. There's a number of different processes that have all operated quite smoothly. And I think that's also significant, although something people have paid less attention to. So a very big positive step forward in the crypto markets in the United States, which we feel very good about.
A very interesting point you raised there about the underlying plumbing and infrastructure of these markets. Taking that, you talked about the potential of payments, you talked about retail investor activity, and now moving to institutional investors. What would you say are some of the trends for the next few years in the market? What do you anticipate it going forward?
I think stablecoins are a place to watch, and it relates to the point I made earlier about payments. I think you'll see, and you're seeing it already, a large adoption of stablecoin usage. And I think it goes into the payments thesis that I talked about. But in terms of institutional investors, their interest at the moment is heavily organized around Bitcoin. And Bitcoin, I think by any fair estimation, has truly met cleared the hurdle of being considered at least a parallel, if not in some ways advantageous to gold as a store of value investment option for people who are looking for either an inflation hedge or some other way to store their value that's not in fiat currency. And so I think that resiliency of Bitcoin demand, the increased use cases, I think all of those are very significant in terms of the adoption of crypto broadly, but Bitcoin in particular in the key application for which it was created, which is as a store of value.
Thank you. Maybe given we're talking about fintech and regulation, maybe turn to the regulation piece of the conference a little bit. You mentioned MiCA already. What do you see as a potential coming out of MiCA, and where do you see maybe some of the weaknesses in the design of that regulatory framework?
Well, MiCA was a revolutionary step forward. You had a very sophisticated regulatory environment or market like the European Union, developing very clear, comprehensive, and pan-European rules covering 27 member states, 550 million consumers, and now we have clear rules around crypto trading, as well as with regard to stablecoin issuance. And so there's a huge example that set. And the UK, for example, has watched that example quite closely and moving to adopt its own regime. And there's a term that people use, which is a second mover advantage. So essentially taking the European example and potentially building on it in some ways. And so I think that's the reality of Europe having, as a major market, gone first. But nonetheless, I think the regime will prove resilient. There's some implementations issues. We're obviously in the level 2 technical standard process that EBA and ESMA are in the midst of. And there'll be some important issues that they'll have to work out in terms of clarifying some of the specifics with regard to the MiCA requirements, which we and others in the industry are actively participating in and providing comment and input into. But I think probably the biggest issue that Europe needs to figure out is the timing issue. The vision in Europe with regulation is always in terms of creating a single market. And I think that vision will be realized, but you have this mismatch with regard to MiCA going live in December of 2024 and AMLR not going live until some period after that. And so without getting too technical about it, you have this mismatch with regard to a single market under MiCA, a grandfathering period that is permitted under MiCA, but then you have AMLR or AMLD5 requirements that are still live that won't be transposed or replaced by the AMLR requirements until some period. So you'll have this very complicated period, which is unfortunate and largely unnecessary. It doesn't really serve any public policy purposes, where you'll have significant frictions in terms of the ability of crypto market intermediaries to be able to sort of create this single market that Europe has now declared it wants to have. And so I'm hopeful AMLR implementation moves quickly. The grandfathering periods are synchronized and reconciled, and then any inconsistent requirements under the vast registrations that the companies need to maintain, even as they operate under MiCA authorization, reconciling those and making them as consistent with MiCA requirements as possible, I think all would be important steps to avoid unnecessary frictions as we move from the current framework to the future vision of a single market under MiCA.
Thanks, Faryar. Maybe to close, one question. You mentioned already your experience during the implementation now of MiCA and trying to implement MiCA, but if you had some recommendations to give to policymakers that you've learned from the process so far, and also in the light as they're already talking about MiCA 2.0 or taking it further, maybe some last reflections on what you've learned so far, and will that framework be sufficient from what you've seen so far, or will you expect further changes? And if so, what type of changes would you like to see?
Well, I don't think we're quite ready to kind of see what sort of changes are necessary. I would say Europe has two big decisions in front of them, and they're decisions that come out of opportunities that Europe created for itself, which it should feel quite good about. One is the U.S. is taking inordinately long time to develop a clear regulatory framework around the crypto markets. Crypto trading is not the whole of what crypto is about. It's one element of it, but it's one of the most critical pillars of having a complete ecosystem of Web3 blockchain innovation. And I think that framework for European policymakers to keep in mind hopefully adds urgency to the point I made before, which is getting AMLR implemented, creating a single AML regime in Europe, that then allows MiCA licensing to truly passport across all member states and for the vision of a single market to come to life. And, on the one hand, it could seem like frictions that companies like Coinbase should deal with, and that happens. So what's the big deal? But I do think there's a race going on, a technological race to essentially be the home for the next generation of the internet's development, what we call Web3, and that ability with blockchain technology to move value in a digitally native manner just as easily as we move information on the internet is a very powerful thing. Europe, by virtue of its incredible work it did with MiCA, is right on the threshold of taking advantage of that. But that requires moving quickly and having MiCA go live in a way that works, and that requires this timing issue that I've talked about a few times. And so I think adding some urgency to that, I think is really important. And then related to that, I think Europe has had mixed views with regard to stablecoins. The stablecoin regime is probably more restrictive than it needs to be. There's still an active debate between the ECB and Brussels policymakers with regard to the role of stablecoins in the European market. The ability of people to have a digital form of the euro to move around is not something that can only or should only happen through a CBDC that the ECB issues, but they're private sector solutions that are complementary to and accretive to the strength of the euro that Europe as a broader kind of policy community should embrace because of the various things that it allows to happen, including dealing with some of the remaining walled gardens that remain in the European market, particularly with regard to banking. And I think a stablecoin solution is not just have a niche crypto issue. It does get into broader policy opportunities that Europe has to deal with, the fragmented banking market in Europe and the degree to which the movement of people's deposits across member states doesn't occur as smoothly as I know policymakers hope it would. So my point largely is this crypto technology and blockchain technology can be a catalyst for a lot of things. The single, European capital market, for example, dealing with the banking fragmentation and other issues. And I think as long as policymakers keep those in mind, hopefully the transition from the current state of affairs to the future potential, I think should be accelerated, could be accelerated, and be quite exciting for Europe and across a number of different dimensions. And and we in Coinbase want to be a part of that. We're very committed to the European market. We want to be a partner to policymakers, and we're eager to share our thoughts and be a part of the debate.
Oh yeah, thank you very much indeed. I think kind of closing on those comments is fascinating, given that one of the key, let's say, foundations of the EU is to create a single market, and technology is one of the important drivers for cross-border provision of services. And I think you set out very well how you and the services you provide can actually integrate Europe, not just make Europe more competitive, but integrate Europe and its financial services. Thank you for being with us today. Really appreciate it. I look forward to speaking to you again soon. Thanks very much.
Great. Thank you, Nick. Thank you for having me on.